Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Friday, November the 5th, 2010, and like we do every night, it's time to look at the markets. Check this out. Okay, once a week, I like to go over the long-term market averages to show you what we're seeing on the long-term picture here. This is the Dow Jones Industrial Average 4-year chart, each one of these candlesticks being 1 week, and you'll notice that we're seeing this double top formation. You can know it's a double top because of the extension from the low points. Okay, whenever you get overextended, like you have here, all the way up to here, you expect a pullback, and whenever you make a rally and then you don't take the time to actually stop and consolidate and so forth and so on, then you get yourself in an overextension pattern. And what you're seeing there is volatility increasing, which you see at tops. Okay, so we're going to talk about this today. Most important thing right here to note right at the start is the high point here and a higher high here. Price activity moving to the upside. Yet the high point of the RSI here and the lower high here is showing bearish divergence move to the downside. You've seen this before here, here, okay, here, like that. And price activity was doing that. Okay, another guy's showing it in another way, showing a 5-point topping pattern. I'll show you his in a bit, but the main thing is this is point 1, this is point 2, 3, 4, and 5. Okay, that's just another topping method. We're going to show you lots of charts have this condition on them. We're going to go over them in a minute. I got a lot to cover today, so I'm going to run through this. Okay, here we are looking at the FTSE, the London Financial Times Index 4-year weekly chart. This is 4-year time span. Each one is counted as being 1 week. You'll note the same condition: 1, 2, 3, 4, and 5. This one's very obvious on the double topping pattern because you've got your low point here, overextension to the sell-off. This one goes lower, makes a lower low, and then makes a bigger move to the upside. It's just very overextended, so you know that it's not just going to keep doing this number. They don't go straight up like that, so it's just an obvious double topping pattern. So you need to keep that in mind. You've got the very bearish sign there. Okay, here we are looking at the NASDAQ. Again, 4-year weekly chart. Each candlestick being 1 week. You've got the same thing: 1, 2, 3, 4, and 5. Okay, and again, note the low points here, 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 here. Okay, the more overextended you get, the more troubling it should be. In yesterday's video, if you didn't watch that, you need to do that. We proved with technical analysis that we are in fact peaking. Okay, if you follow us on Facebook, David Raw posted this today. He was showing this count where you got the 1, 2, like I was saying, 3, 4, and 5. All right, double topping pattern. This is the SPY chart he's showing this on. You can see the same formation back here in the peak of the 07, 1, 2, 3, 4, and 5. Okay, they can be higher than the previous and still be topping like that. All right, it's important to note that. Some guys will draw it like that. Okay, here you have the S&P 500, same thing, 1, 2, 3, 4, and 5. This time period, you've got, what's it, 5 consecutive weeks to the upside. Back here, I believe it was in the Dow Jones or the NASDAQ. I can't remember exactly which one. You have to check it for yourself, but I think we had 8, so 8 consecutive weeks to the upside. So it's, having 5 is strong, but it's not as strong as the previous one. So you can keep that in mind. Also, we keep these charts on our free website at perfectstockler.com all the time, both the short term and the long term, all of which have my annotations on them and update every single day. So you can check that out there as well. Okay, now I want to go into some Q&A. I've basically showing you what I see from yesterday as the market being peaking. I gave my very best technical analysis on that, and to me that is solid. You can't change that. The main thing you're doing whenever you analyze markets or trade opportunities is you're looking for truth and you're trying to avoid lies. That's it. There's never anything else to that. Okay, whether you do it from a technical standpoint or a fundamental standpoint, it's always the two different things. You're looking at the truth. Where's the money going to go? You want to put it on truth, not the lie. So whenever you're looking at the market and you're hearing news come out about the fundamentals, or you're looking at technicals, so forth and so on, I get questions all the time, and I like to start kind of, whenever I find one, it's a really good question that I think that the rest of the market needs to know about. I'm going to go ahead and cover that here. So today we're going to cover 2 questions brought to us by a few members. And the first one, of course, is can you fight the Fed? Should you not fight the Fed? So forth and so on. So let's look at that. Okay, a lot of people have said that you shouldn't fight the Fed and that the market's not going to actually fall because the Fed's going to not let it. That's actually a flawed statement, and very much so. I've proven it myself in the past. The main thing to consider here is that the overall market averages are an average. They're an average of individual stocks. So if you see individual stocks doing a particular thing, it's no reason to say that the particular averages cannot do the same thing. It doesn't make any sense. When you're looking at this particular situation here and you see all kinds of sell signals, you had shooting star formations, low volume rally, no pullbacks, overextension, so forth and so on. And someone could have just easily said, I'm going to buy this because you can't fight the Fed. It's just going to go, the Fed's going to make it go up. And then one day, boop, there you go. All right, a big old sell-off, 10 million shares to the downside, like it never ever happened. All right, so that's the danger you run by buying, even though the signs are telling you, the chart's telling you, leave it alone. Okay, so that's why at perfectstockler.com we don't just go buy anything that's going up. We first require quality, and to do that, we meet a certain series of qualifiers. But we have 6 videos on our website. For those who are interested in that kind of thing, you can go check it out under our swing trading course. It shows you, even in this market, there have been good quality long opportunities, but we always suggest you find the quality ones, not the ones that are dangerous, that are risky, high-risk situations that are fakes, because you end up with this situation. So my conclusion, of course, is that indeed you can fight the Fed because the Fed's not as strong as you think he is. The next thing I want to bring out is that a lot of people have said that it doesn't matter what you think about the trend, you need to just trade the trend. Well, this chart again would prove that wrong as well. The main thing here is that a lot of people look at the market and they say it's up or it's down. It's going up or it's going down. That's all there is. You trade those. That's not true. In fact, there's a true uptrend. There's a fake uptrend. There's a true downtrend and there's a fake downtrend. If you don't know the difference between those 4 different styles, you end up with situations like this. Now, some will tell you, well, it doesn't matter. You can buy and just keep a tight stop, and then how'd your stop do you? It didn't help you at all. Okay, you really have to know what you're doing out there, or you get yourself caught in a fake move to the upside. You've heard the saying, a rising tide lifts all boats. That's fine, but when the tide goes out, as Buffett would say, you know who's swimming naked, okay? Here we have another chart with the same result. I know someone's going to say, that's one company. No, it's not one company. There's dozens of them out there like this. And if you have dozens of them out there, it only takes so many before your entire market looks like this, okay? I'm not saying it's going to. I've said before, from time to time you can get away with trading a fake trend to the upside. I'm just warning you, it's highly dangerous when you do that. In my opinion, when you're topping, when you're peaking, you definitely want to be shorting into that, or at least be cautious on the long side and be in cash. That's a smarter move in my opinion. And here's yet another, okay? Big old move to the upside for about 2 months. Could have been a buyer of this one, and you would have got burned, okay? Just that's the point I want to draw out to you, is that, in fact, believing that you can buy anything because the Fed's going to keep the market from falling is flawed, substantially so. Okay, someone asked me, look at the Russell. It's the same as all the other market charts out there. You got the same condition. The only thing that's different out there is China right now. China's pretty hot right now, but again, when the global crisis hits, then you're going to see China go down with it. The main thing about the fundamentals, I'm going to go into that on Monday. I'm going to show you why clear as day you can tell that from the fundamental standpoint, you know that Europe's going to have a credit crisis, and they already having one, but you're going to have a default there, and that will be the end of it. And I'm going to show you why I know that on Monday, okay? But the main thing here, looking at the Russell, exact same situation here, showing peaking signs. You definitely want to be very cautious in this market. And that's about all I have to say about that. I'm not going to waste any more of your weekend. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. Also, feel free to subscribe to our YouTube channel. We appreciate that support. It helps us stay free. A quick look at our disclaimer. The disclaimer, read it and weep. God bless, take care, enjoy your weekend, please be safe. I hope to see you all in our message forum on our free website at perfectstockalert.com. We're all looking for the same thing, wise trades, long or short. As long as it makes sense, as long as it's a quality move, hey, we're on it.